You're tuned back in to Agriculture Today, and we continue our show with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Guy, at the end of last segment, you mentioned continuing your conversation about transportation, and what do you have to tell us?
Well, we're still seeing restrictions at the Panama Canal. Generally, they transit 40, 45 ships in a normal year. That's dropped below 20. It's starting to recover a bit. We're in the rainy season in Panama, and hopefully those water levels in the lake will rise to put us back to a more normal situation by fall. In some extent, that's helped to support the U.S. exports of wheat. In the U.S., we don't have to take the long way around, either going around South America or Africa. We've done that by raising the basis values for wheat on the West Coast and railing a bit more grain west rather than the Center Gulf or Texas Gulf. And I think we'll continue to see wheat particularly move west to those Asia markets to satisfy that demand rather than to move Texas Gulf. By corn and bean harvest, hopefully that'll be sorted out and it'll raise the rate basis values across the whole grain belt.
And getting back
just to mention the Suez Canal and Red Sea situation, that continues to frustrate things, particularly for wheat out of Europe and the Black Sea, as they're basically taking the long way around to get to those higher valued Asia markets. And we had a few instances here there just this past week, which is just really delaying or extending those routes in that dry bulk market.
Getting back to talking about our crops, starting off once again, getting back to starting to talk about our crops and continuing our conversation with corn.
Yeah, the domestic supply demand balance sheet had no changes in it. There's still a lot of risk there, and here we're sitting in now mid-June, and really if there are going to be changes in that cause on the supply side, it'll be in the next 90 to 120 days. So stay tuned, I guess. But we did not see any change of. And again, just like for wheat, you can see what's happened in stocks to use and prices the last 3 years. They just go opposite here. 22-23 domestically, at 9.9% stocks to use and basically a 654 price. Then we went up to 13.75% stocks to use. 23-24 down to 465. And now again, the market's assuming large yields, no problems, and that may come out, that may not come out. But as they sit right now, projection about 14.2% stocks to use, prices at 440. So you can see the stocks to use, and the prices going different ways. I would say we are seeing a decent pace of corn exports, about a neutral one for this marketing year yet, and this year will end August 31st. So we're watching on that, and the world stocks to use down to 25.4%, and that'd be the lowest we've seen in, well, at least since 2017, 2018. And world less China stocks to use 10.8%, and that'd be the lowest since basically 2021. Guy, have you any thoughts on the international side on corn market?
Yeah, interesting. They actually lowered last year ending stocks, increasing this year's beginning stocks for the coming crop year 24-25, which is sign things are tightening up a little bit better than what they had expected. Global coarse grains output's supposed to be an estimated, say this right, 1.51 billion metric tons. And of that, we've got 1.22 billion metric tons will be corn. Both of those numbers are a bit higher. Just looking at the countries, we'll start with Brazil here, Dan, with Brazil estimated at 122 million metric tons by the USDA. I think you've got some numbers there for CONAB, and there's a discrepancy there. You want to expand on that a bit?
But just quickly, it's the same thing you and I and Shelby have been talking about all the way through, and that the USDA is saying 122. CONAB came out this morning, raised their number up to 114. So there's still a discrepancy, and I don't know, Guy, what your thoughts are. I would not be surprised that over the next several months we'll have basically a process of convergence to see if they meet in the middle, or one where if the South American crop numbers come up or not. I still think, Guy, and I throw this to you. You know, this is a big deal. You know, that's about 8 million metric tons differential. Even if you meet in the middle, we just got done talking about how tight world stocks are projected to be, and let's say you take half of that down. Well, gosh, you're starting to ration usage on the world side. Thoughts?
Yeah, just might extend that on to Russia and the Ukraine. Next year's Russian crop for 24-25 was reduced slightly, 600,000 tons to 15.4 compared to 16.6 last year. Ukrainian estimate was up about the same amount, 700,000 tons to 27.7, but that's 3.3 million tons below last year. So we're seeing tighter crops in both those countries in corn as well as in the wheat situation. Really not too much other to add on that. Import demand for Southeast Asia is unchanged. China is still holding at 23 million metric tons of corn imports for both this current year and this coming year. And I think that's about right. I like to be optimistic that might reach a little higher, but I think 23 is probably a pretty good number.
What are we seeing on the side of things for soybeans?
I'll start on the domestic side, if that's okay. A small change in this projected year's marketing supply demand balance sheet for 2024-25. Again, this marketing year goes to August 31st. We did see a little bit lower crush for soybeans, 2.29 billion bushels, down from basically 2.3, so a small amount, but still the U.S. usage picture still predominated by crush. Exports are important. The USDA is projecting from 1.7 billion bushels exports this year to go up to 1.825, and really given what South America has plans and hopes to do, that number is probably a pretty much a bullseye target for South America, that they're going to work for that not to happen. So it's going to be interesting to see. Again, the new crop balance sheet, 52 bushels an acre, record yield at or near record yield, and again, same issue. We're now in the next 90 to 120 days going to see whether that holds up, and if it does or not, it will have a lot to do with where prices end up and go. We're still at last 3 years, two marketing years ago, we were 6.1% stocks to use, $14.20. Last year, 8.5% stocks to use, down to 12.55. This year, up to projected 10.4% stocks to use, down to 11.20. So again, we've got this overall issue going on, Guy, where we're having larger crops starting to have that play into the market's considerations. And I would say the projected world stocks to use for next year, 31.9%. If that happens, that'd be the highest since back in 2018-19. And world minus China stocks, whereas this year projected about 28.6%. Looking at what's expected for Brazil next year, South America, up to 32, and of course all that would bode pretty negatively for soybean prices.
Yeah, getting much more comfortable in the soybean situation. That said, China, who's importing 2/3 of the world's oil seeds, their number pretty much unchanged this year, with imports at 105 million metric tons. That's a jump to the highest level ever, with their crush just under 100 million metric tons at 99. Next year's projection for China is to import a record 109 million metric tons, with their crush climbing up to about 103. So we're expecting to see good demand continuing to come out of China, which always keeps us optimistic on that. Did Mike touch base just on Brazil? They're pretty key. Their crop is coming in about 169 million metric tons, and CONAB has some different numbers for Brazil there as well. Dan?
147. So these are not trifling differences. Something's going to give on that, and I think we're sort of like a ship sailing to say, well, whatever's out there, it'll work out. But man, there's some differences that are going to have to be reconcile, there'll have to be a convergence on this, and that'll be part of what we'll be looking for in upcoming reports.
Yeah, well, that'll continue to provide a bit of underlying market volatility as we go forward when you have that divergence of views out there. So that's not all bad.
And just giving a quick update on sorghum.
We had another up and down. Sorghum tends to have up and down weeks in terms of exports. This year was a great week. This last week, the week ending June the 6th, over 7 million bushels. That we were down to about 2 last week, the week prior to that. So it jumps up and down, and 245 million bushels projected by the USDA for this year, and we're about 80% of the way there in terms of quantity, about 79% of the way through the marketing year. So, grain sorghum is a big crop is an important crop out here in Kansas, Western Kansas in particular, Western and Central, and we've seen a pretty good year of prices, and I guess I don't see anything changing that, Guy. It all comes back to the country you used to work in back in China in terms of their sorghum demand. Any comments?
Yeah, no, I just continue to be optimistic about sorghum demand into China. One of the biggest drivers of that is the differences in the import taxes on corn versus sorghum. Even though it's a premium to corn here in the U.S., it's still a discount to corn in China. So I think that'll continue to lend support as long as the government doesn't change their view on that. So I continue to remain optimistic on most of that, all that export volume and a good volume of total U.S. production will continue to move that direction. If we get some improvement in the international shipping and freight situation, that should add to those basis values.
And China sees sorghum as a food input, right?
Yes. Well, the biggest chunk of it goes into the food, or the Baijiu market, particularly if you enjoy very, very strong grain alcohol. But it works into a number of sectors over there, so that's good.
Dan, Guy, I appreciate you both taking the time to join us today and give us our grain market update.
Thank you very much, Shelby.
That was K-State grain economist Dan O'Brien, and he was joined by the senior economist at the IGP Institute, Guy Allen. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you ahead.